This breakfast where we are getting our head around this morning some numbers from the Dubai property market. May seeing one of the fastest growth rates on record for Dubai real estate. In the studios, one of the men who's been crunching the numbers, Zhann Johincke, who's the Director of Market Intelligence and Research at Cavendish Maxwell and the author of Property Monitor's monthly report. Zhann, it's lovely to see you. Thanks for joining us.
Likewise, morning.
So your report this time, May Mayhem, you're calling it, starts with the phrase, "Here we go again." Prices have skyrocketed in May. What kind of appreciation are we talking?
So we're looking at 2.5% month on month. And as you did in the lead in, that's the biggest increase we've seen in over 2 years. And then puts us back to the increase we didn't see since the last market cycle where we were seeing 2.5%, 3% month on month with a market that rapidly ran away. So it's the first time we've seen it in over 2 years. It comes after a relatively slow and steady start to the year where we're seeing 0.6%, 0.62%. And then in April, we saw just over 1%. And now big bump up to 2.5%. Always makes me nervous when I start to see that.
Why does it make you nervous?
The quicker things go up, the quicker they go down, the quicker we also tend to get in trouble. And it's not sustainable. If you were to imagine 2.5% month on month, what's that take us to by the end of the year? Is it 30%? Right? Is that realistic for a property market that's already come through a 2-year growth cycle? No. Is it something that can be maintained? I don't think so. But when I saw the numbers, when our team processed the index, I pressed pause. It goes through an audit when we see those sort of numbers, and we dug in. And what we're seeing is, look, an index is a representative basket across the entire market. Just like you look at inflation and CPI, right? Some things go up, some go down. What was driving the ups was the off-plan segment. The off-plan segment in specific communities. Some of the communities that, let's take Zhann, for example, where you'd look at a ready property selling about 850 dirhams a square foot to new project launches coming on at 1250 a square foot. Not to say those projects aren't worth it or the other ones are undervalued. It's just a different quality, different type of market, and that drove that community up as well as several others.
Because there's two things that we're looking at here, aren't we? There's the pace, the acceleration, but there's also the price, and it's not just the pace that you are putting in historical context.
Yeah, so that pace that we just talked about, let's see how that pans out over the coming months. It may taper off, it may keep going, and it may be driven by the off-plan segment. The number of transactions, which 2 months ago, it was March madness. Now we're in May madness. Almost 12,000 transactions. They're record highs that we're seeing, but it does come on the back of a relatively muted month where transactions dropped off about 40%. So if we take those last 3 months, averages them out, it's not as big of a jump. We did have slowdown with Ramadan, reduced working hours, people on vacation and those things. But at a 12,000 transactions a month, that's huge. That's going to put us on track to do well over 100,000 transactions for the year, which will be an all-time record in the Dubai property market.
Square footage, where are we in comparison to sort of March 2014, which is, well, September 2014, which is where we kind of were looking at the peak of the last cycle?
Yeah. So we're about 80 dirhams a square foot below that, about 6.5%, 7% off that peak of the market where it was it's an easy one for to remember, 1,234 dirhams per square foot. So we're just off that number. We're likely to catch that in the next, say, 6 months or so, if price appreciation keeps going the way it is, a little bit sooner. That doesn't mean that we're reaching the top of the new market cycle. So market cycles don't always necessarily go higher and they don't go lower. So each cycle is driven by different fundamentals with it. We will likely see this one on a price basis go higher and hit there some point this year.
Do you think, how much higher could we go than the last market cycle?
Very good question. We're probably looking right now at a market cycle that, if all things stay the way they are, supply doesn't get too crazy and out of control, another run that could last 12, 18 months. So we're probably looking at prices going over that number. I'd say we could edge close to 13,000 dirhams per square foot on average by that time.
You ask in the report whether or not there is cause for concern. You don't answer it in the report, is there?
I always like to pose a question. The answer is it depends, right? So the ready market, the completed property market, we've seen that relatively, it grew really, really quickly, and now we've started to see it plateau. What's growing really fast now is the off-plan segment. Is that going to be sustainable? Is 12,000 transactions a month sustainable? Potentially, if the buyers and the investors are there, what has to follow suit is population, people to reside in those units when it comes to handover. My biggest caution is always around the off-plan market and resales or flipping and speculative activity in that off-plan market. Right now, we're seeing that number fall a little bit month on month, but on a 12-month rolling average basis, it's at 20%. So 20% of resales are off-plan properties.
I'm speaking to Lewis Alsop from Alsop and Alsop in about an hour. Looking at their monthly snapshot, they point out that the vast majority of sales are under 3 million dirhams, that they are, it's not the big crazy foreign money that makes the headlines. They talk about this year being sustainable, consistent growth. What do you think?
In certain segments of the market, yes, and we have to break it down that way into different segments. The guys at Allsop and Allsop are great. Where they're probably seeing a lot of that stability in that price point is in the ready property market, is in that ready and resale market, not necessarily in the off-plan market. So a lot of the off-plan launches we've seen recently have pushed into the ultra-luxury price points, well above 3,000 dirhams a square foot. Those sales are what's driving the off-plan market, but the main market, that completed and ready market, that's seeing smaller price points. That's where the bulk of that activity is happening on a number of transaction basis. You're always going to get the value numbers as the headlines, but on a volume basis, it's in that middle, that main market.
30 seconds left with you. Do you think we'll see a slowdown over summer, or will it continue?
I don't think we will. I think we're going to see increased activity. There's so much momentum with the market now. You've got China opening up and more people coming back in. I think we're going to see another wave of that coming in and coming through the summer into probably the fall, where you're going to see more and more project launches coming on. It's going to be a strong market.
Zhann Johincke is the Director of Market Intelligence and Research at Cavendish Maxwell, one of the two property experts that we've got this morning, going through the May numbers with us, one of the fastest rates of growth when it comes to price appreciation for the Dubai property market that we have on record. Do get your thoughts and your feelings in this morning.
Dubai Eye 103.8.
Join the conversation.